What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into the fascinating realm of harmonic technical analysis, which is a powerful strategy that uncovers hidden patterns within the market's movement. So for those of you who are new to the channel, harmonic trading involves identifying specific price patterns that have repetitive and predictive qualities reflecting the natural rhythms of market cycles. So patterns like the Gartley, butterfly, and bat patterns are derived from Fibonacci retracement and extensions, offering a systematic approach to interpreting price action. So by being able to recognize these harmonic patterns, we can gain valuable insights into potential market reversals, continuation patterns, and key levels of support and resistance. Now, as we look ahead to the upcoming week, we're also going to be applying these harmonic principles to analyze the current market landscape and forecast what lies ahead. With Q1's earnings season still in full swing, we'll also be examining how these patterns may intersect with corporate performance, which can help provide us with a comprehensive outlook for the week ahead. But before we dive in, don't forget to hit that like button. And if you already haven't done so, make sure to subscribe to the channel and turn on notifications so you never miss out on future videos. I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into those charts. So jumping right into the SPY here. SPY on the weekly has still this ABCD pattern. At the completion of point D, we did come back down to below 508.29, but we were able to reclaim that level there, and we closed on Friday at 511.29. So what can we expect here harmonically? I do want to mention, for those of you who are new to the channel, harmonics is not based, when your pattern forms, it does not mean it's going to go to target one. For this example here, a lot of people who are new may be confused that when the pattern forms, it has to come back down to target one. That's not the way it works. Scott Carney, who is the creator of harmonic strategy, the harmonic strategy approach, has a lot of stuff, a lot of information on how these patterns work and what can happen after a completion of the pattern. So in harmonics, there's two types of reactions, type 1 and type 2. So if you want to learn more about the information, I highly recommend going to his site, harmonictrader.com, and he has a lot of free information, a lot of books there as well, and videos so you can understand how this works. So in a harmonic pattern, for this instance, bearish harmonic pattern, you would expect that this will reverse back down to target 1. There's two types of reaction, type 1 and a type 2. So a type 1 would be it coming down after the pattern is complete, and then it would be sufficient type 1 reaction at target 1. That reaction is completed. It can still go all the way down to target 2, and then finally, once wherever this type 1 reaction, if this was to assume that we were to hit target 1, that would be a sufficient type 1 reaction, and you would expect a type 2 return to potentially hop, right? So for this case, this bearish harmonic pattern on SPY, it's not clear yet whether it wants to do a type 1 reaction. You have two support levels here for above the 21 EMA, and now you reclaim the ABCD here at 508.29 off of a hammer candle close on increase in volume. So if this is going to play out target 1 down the line, this is obviously on the weekly chart. It could take a few months out, maybe 6 months, who knows? We still don't know yet. It's still looking like it does not want to come and do a type 1 reaction just yet, as it looks like it may be coming for an attempt to hop, but still too early to tell. So this is where we jump down to the 1-day chart here, where we have a current bullish harmonic pattern, the shark pattern. So in this example, we did complete the type 1 reaction at the completion of the pattern at point C here. We came up to target 1, and then we couldn't continue further to target 2, and we came back down, which was going to start a potential type 2 return to hop. Fortunately, it did not come down here, or unfortunately, depending on what your what outcome you would have liked this to play out. You did not come back down to hop. You actually almost came down here to OB, but not really came down here fully, and you found support. You had Thursday with the hammer candle. Now this is Friday off of an increase in volume with the doji-ish candle here above, reclaiming target 1. So what can we expect harmonically above here for the 1-day pattern here? If this finds support here above target 1 for a few days, you could potentially come back to target 2 at 521.10. And also the EMAs are starting to curl up. You could get a potential 921 crossover to the upside. Now, as I bring out the harmonic oscillators as well as some of my drawings, I know there's going to be a lot here to look at, but the next level here to the upside for SPY, I am looking at 515.85 should you break above the 50 SMA there, where you have a bit of resistance. So the MACD started to flip green. We could be in a channel here forming higher highs and higher lows, and I'll draw this out really quick. So something like this could be taking place, right? We could come back down to 502. 502.21 is a line where I have as a level of support right now, and then continue pushing to create a higher high. There is that scenario that could play out. But if SPY continues to push up above here, the next level I would be looking at would be 515.85, just call it 516. Above that, then we have 520.54, and then target 2, 521.10. If you fill here, 509.24, we still have that gap fill to fill here around 505 and change, 506 and change. So if you break below that, then we go to 502.21. 502.21 could send this back up to OB there, and then maybe down the line to terminal bar 493, and then hop at 489.21. Right now, the HSI kind of bounced, stayed above the midline, and it looks like it's curling up to the upside. So if the SPY is able to find a break above the 50, then this could really go to 516, maybe even higher, to complete the whole type 1 reaction at target 2. So right now, it's still too early to tell. I want to see what happens here above target 1. There could be a situation where you consolidate here. We still have earnings this whole week. That could definitely just keep us in a consolidation period, or we do just come back here to retrace that gap we created on Friday. So definitely look out for SPY here. I do think, in my opinion, this is just my sole opinion, but it looks like it is starting to potentially come back up to wanting to test around down the line to 520, but I could be wrong. This could actually get rejected here. If you lose that channel around 502.21, then I'd be leaning a little bit more bearish to play out the type 2 return down to hop. So definitely keep an eye out for a SPY. So jumping over to the triple Qs here. So the triple Qs on the weekly currently still has this bearish shark pattern, where similar to what SPY is doing on the weekly, it found support above the 21 EMA, where you did reclaim 1.13 of the shark pattern at 424.12, and we closed Friday at 435.48. So what can we expect here for the triple Qs? Something I forgot to mention in the SPY analysis that I really just wanted to share really quick, just to go over to see and you guys understand what I'm looking at. I forgot to mention that the HSI on the weekly for SPY was at these oversold conditions, so you could be generating an HSI arrow back up, signaling more confluence there for a potential reversal. So I just wanted to note that really quick. Similar to the triple Qs here, you almost reached these oversold conditions, but did form that hammer candle just like SPY. A lot of the indices and a lot of the blue chips are going to be looking like potential hammer candles here for a potential reversal back up. So to the upside here, based on the shark pattern on the weekly, the next level would be a retest of hop there at 445.47. Should this continue with more momentum in this instance here, if we are going to be looking to retrace back above the midline and then going above it, breaking above it, and you could really send it to these overbought extreme conditions within the harmonic pattern, that could definitely send it above hop there, but way above hop, which is at 445.47. Obviously that's a key level to look at, because there was 1, 2, 3, 4, 5, 6 attempts there where it failed and is not able to get above it. So if we do reject, obviously it's still too early to call this for a type 1 reaction. As you can tell, the extension of the pattern here for the shark could extend all the way to hop. This is why it still wasn't unclear yet when the pattern formed that it wanted to come do a reversal just yet, because of that extension of point C could actually be all the way up to hop. So it's going to be interesting to see if the triple Qs breaks above it, then you might be able to invalidate that pattern and you could push higher on the triple Qs. If we go over to the daily, there is not a current harmonic pattern on the daily, but we look like a W formation is looking like it's forming here. So in W formation and harmonic pattern would mean a reversal back up to the back down to the downside, right? But you would still need to create the next leg D for assuming here that this is a W formation here. A W formation in harmonic patterns is actually a bearish reversal back down to the downside, but you would still need to come and make a higher high for that to happen. So that could happen as a shark pattern as well. A shark pattern, we do have one on SPY, so this triple Qs could be generating a potential bearish shark pattern, but you would need to create point D at a much higher level potentially. So it's still too early to see if that's going to happen. We don't have a harmonic on the daily, but off of daily we can look like this was a W formation forming, and you did have a gap here. You had Thursday with the hammer candle to the upside here. We created that gap obviously off of Apple's earnings and the data that we got for Friday, which was a bit bullish here for the market. So if we continue here, the next level you're finding resistance here is at that 50 SMA here for the triple Qs. So if you break above that, then you can see maybe this go back up to that 445 range and 450.72. If it gets rejected here, then you do have that gap to fill, which is right around 428 and change. Failed the 9 EMA there, and then you come back down to, I have a target there all the way down to 408.71, but you might be able to find support around 413. If you fail that 408.69 here, 408.71, then the next level would be the 200 EMA, which is between 401 and the 200 SMA at 399. So definitely keep a close eye on the triple Qs. So jumping right into the Dow Jones here. So the Dow Jones does currently have this bullish black swan on the daily. So what can we expect here harmonically? I do want to talk about what happened first on Friday before we get into these targets. On Friday we did close at 386.77, and by definition is not the best perfect candle here, but it looks like a hanging man. Obviously the body would be much clearer. You would need it to close with no wick, but you could say that this was a potential hanging man here at the rejection of the 50 SMA here with an HSI dot, which could mean a reversal back down off of increase in volume. On the HSI though, it did bounce off the midline, so it's not unclear. It's not clear yet what direction is going to go. We have to actually give it maybe a day or two to see if this is actually going to continue pushing higher or coming back down to fill some levels here. So to the downside, if you do have resistance here at the 50 SMA, I'd be looking at PT1 there at 384.80, then the gap fill there around 383 and change. Below that, then you do have CD here at 376.14 of the black swan pattern, where you do also have some confluence there with this line I have drawn down around 376 and change. Below that, then you can see OPR at 369.97, where I have another level of support right close to 369.50, kind of close to the 200 EMA. So I'm looking at the HSI here, which did bounce off the midline, and if it does come back to these overbought conditions, you can continue pushing up. So that push to the upside will need to break above the 50 SMA, where you can hit PT2 here at 390.16, then 392.04, and then there is a gap to fill there around 394 and change. Now there is a price target 3 here that the black swan is calling out. So I do want to note that that is an extreme level in the black swan. When you break above PT2, there are instances where you just get high momentum and you continue pushing like almost a violent move up to PT3, and that target is at 412.84. Prior to this pattern being formed, I did have a level there at 412.35. I forget how I got that, but I think it was from not this previous high, but from the previous all-time high level. By taking the fib retracement, it gave a target there at 412.35. So now it's giving me a bit of confluence for PT3 there. I'm not saying that's where it's going to go. Obviously, if those are unfamiliar with the black swan, for this to hit PT3, there's definitely has to be something news related above PT2. First, you have to get above PT2, and a violent move tends to happen, not all the time, but sometimes it tends to happen where it does go to PT3 pretty fast. And obviously, off an indice for that to happen will definitely have to be news related. So something that I am keeping a close eye on is the energy sector. I will be talking about that in just a bit, but the energy sector, crude oil is coming down, so we could see maybe the CPI and PCE inflation levels maybe start to come back down in the next few months. Who knows? Still too early to tell. I'm not sure yet, but the crude oil futures is coming down back to test some of these breakout levels. So having said that, for the Dow Jones, if this breaks above PT2 and we do get some bullish momentum in the markets, then you can see a potential violent move towards that 412.84. Something that I wanted to share here that's clear here on the Dow Jones versus the triple Qs and SPY is that we generated on the weekly here. This has an ABCD pattern just like the SPY, but it has 1, 2, 3, 4 retests above the 21 EMA where it closed, and now the Dow Jones did come back to these levels, these oversold extreme levels within the HSI, and we do have a pattern, and it formed an HSI arrow to the upside off of increase in volume. So in harmonics, this HSI arrow is suggesting potential reversal back up. So if this goes back up, the next level off the weekly could be at 394.71, then a hop at 408.76. So hop at 408.76 is very close to that new target there at 412.84 down the line. So that's not too crazy to think that it can hit there, especially given confluence there with the weekly target at hop around 408. So I'm definitely going to be keeping a close eye out on the Dow Jones. If there's more momentum here to the upside, maybe the Dow Jones is signaling the potential reversal, as it has tend to actually play out first and then the indices follow. As you could tell here, the Dow Jones ran and ran first to the upside. It was actually the first indice to create a new all-time high, and then the SPY and Qs follow. I'm not saying that that's what tends to happen most of the time, but the Dow Jones is a clear indicator here right now that, at least harmonically speaking, for the weekly, that a clear reversal did print here on the weekly. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So IWM finished the week at 201.90, finally reclaimed the $200 level. So what can we expect here? I do have a resistance line at 201.99. As you could tell, the last time we broke above here, we rejected, and then we had a false breakdown. We came back down. So it is trying to attempt to break out this level once again. So if it does, the next level above 202 would be the 211 area here, 211.88, that high there. Above that, then you do have around 223, 224, and then PT3 down the line at 242.82. Obviously, this is on the weekly chart, which could take some time, but something that's interesting here is that IWM is potentially forming a head and shoulders pattern, right? You have the left shoulder here, this would be the head, and this could be creating now the right shoulder. So if that is to play out, the neckline is somewhere here around the 200 SMA, which is right around 193 and change. And if that head and shoulders plays out, you can see this much drop much lower here to maybe the 200 EMA at 184.78, and possibly even that gap fill around 170 and change. Obviously, like I said, that is on the weekly time frame. Could take some time to play out. And if we go and look over to the daily here, just like the other indices, IWM is finding resistance at the 50 SMA on the daily. So if you fail here, you could fill that gap we left here on Friday, which is around $200.23. Below that, then you would have a retest of the 90 EMA here there at 199, and the 90 EMA at 198 and change. If you fail that, then you could potentially come back down to the 200 EMA, in which case a retest of the 200 EMA would form a double bottom here for IWM. Obviously, it's still too early to tell. Right now, in my opinion, this looks like you could be consolidating here. The HSI also is curling back up. Maybe it creates a double top, and that could be anywhere between the gap fill to around 210, maybe even 211. If it does go to these overbought extreme conditions, it could definitely be pushed higher than 211 and change, and much higher above that. So right now, still too early to say whether IWM is going to continue, but it definitely has shifted a little bit of that momentum. If we take a fib retracement from the previous swing high to swing low, we are currently knocking at the door where we have some resistance at the 618 here at 204.03. So it is shifting momentum right now. You need to definitely reclaim the 618 there, because the 618 would start implying that the momentum has shifted back to bullish, which would create higher highs and higher lows. If it gets rejected, you could be coming back down, maybe to create a higher low. So still too early to tell. We'll have to definitely keep a close eye on IWM. Jumping over to XLF here, XLF has the bearish arc pattern on the weekly. It did match in volume again. It's low volume, but it did manage to stay above the terminal bar here at 40.47. Is finding support above the 13 still. So we'll see what is going to happen here for XLF. The financial sector, just like the Dow Jones, is implying, at least on the weekly, that it is oversold here within the harmonic pattern. It's much different. The HSI is much different than the RSI. The HSI measures the harmonic strength index within the harmonic pattern, where it's oversold and overbought within the harmonic pattern. So if this could form a potential reversal and create an HSI arrow back up if volume starts to pick up again. If we go over to the daily here, we can look at what's going on here with this pattern here. Obviously, this pattern here, I believe, is the butterfly. The butterfly pattern just straight went above hop, and right now it's still unclear if it's going to come back to hop there at 39.93. The HSI did curl back up, and it's looking like an attempt to test the 50 SMA, where a lot of the indices are having some bit of resistance there. So if you were able to reclaim the 50 SMA, the next level we'll be looking at would be around $41 and change, and then 41.70. Above that, then we have the previous all-time high around 42.22. So it's going to be interesting to see what XLF does here, because the financial sector has been coming down slightly here. So we'll see if it starts to pick up momentum back a bit again. So definitely keep a close eye on XLF. Jumping over to XLE here, the energy sector does have this bearish crab pattern on the weekly. So what can we expect there harmonically? The next level I'd be looking at here would be XA at 90.56. We did generate an HSI arrow here a couple weeks ago. So we're going to see if this actually comes back down. The HSI was completely overbought, which is why we got that reversal signal there, and it did cross the midline here. So if this goes back to the oversold conditions, these extreme levels here, it could be roughly around 82.51. Failing that, then we retest the 200 EMA there at 76.40. There is a gap to fill here around 73.74 and change. Below that, then you have target 1 at 67.27, which is below the 200 SMA, and then target 2 at 50.32. Obviously, it's going to take some time for that to play out. But if it finds support above here, above 90.56, the next level I would be looking for XLE would be 101.52, then hop at 108.63. Something I wanted to mention is crude oil. I mentioned earlier here that crude oil is starting to show some signs of weakness. I do have a line here at 83.45 where it found resistance again, false breakout, and now you're losing the 50 SMA off the weekly. You cross down the midline here. You could be coming down to retest the 200 EMA there around 75, and where the 200 SMA is at as well, for $75 and change. Below that, then you have 70, and obviously you have hop at 52.83 down the line. So is crude oil here showing some signs of weakness here. I know this is a little wonky, but there is a potential head and shoulders here. It's not the right shoulder actually went higher than the left, but you can see that there is like some confluence there with the neckline being around there. So if that is to happen, obviously the energy sector would be coming down, which could have the print for CPI be much lower for the next few months. Obviously too early to tell, there's still a war going on, but that's something different. Definitely something that I've been noticing here to see if there's actually going to pick up momentum to the downside, in which case the market could be pushing higher down the line. So if I go over again back to XLE on the daily, we'll quickly look at what's happening there. You do have this bearish shark pattern where you did get the 921 crossover and you lost hop below at 94.46. Right now you did lose the terminal bar and managed to close on Friday just above it at 92.22. So we closed out Friday at 92.57. You're finding a bit of support there above the 50 SMA just slightly. The HSI still has some room to the downside to reach these oversold conditions, in which case if it does lose that level, the next big level to lose would be 91.01. The 200 EMA and SMA around 87 and change, and then you would complete the type 1 reaction to 85.60. Below that, then you have 82.51 and then $80.49. If you're able to find support over the terminal bar, the next level you'd be looking to reclaim would be hop at 94.46. And then if we take the fib retracement from this recent swing high to swing low, we still don't know if this is swing low yet, but let's assume that it's finding support here. For this to be bullish back up again for the energy sector, you definitely need to reclaim the 618 here at 96.09, and then the high there at 98.97. So very interesting to see what the energy sector is going to do. The volume specifically on the daily is picking up and is ramping up, so we'll see if the energy sector is cooling off a bit. So definitely keep a close eye on the energy sector. So jumping right into Apple here. There's a lot to digest with this, and I highly recommend, if you did not watch the analysis for the Dow Jones for this video, check the timestamps below, go over to that analysis, because it's going to make sense here, talking about the swamp patterns I mentioned. Something about the Dow Jones and that part of the video where I covered a little bit of the swamp pattern and what happens above PT2, where you can get a violent move, and this is exactly what happened when Apple above PT2. Usually when the white swan pattern stays above PT2, there is a potential violent move into PT3. In this case, it was actually for earnings. You got news, and that's where that target hit at 185.81. It actually went higher, right? Apple went to 187 even, but found resistance there. So there's also a dragon pattern here that I will share. That's also some confluence for this to potentially continue pushing higher down the line. Obviously, it's still too early to tell, but this is one of the examples I was talking about in the Dow Jones part of the video, where you can get a violent move above PT2, and most of the time it could be news related. In this case, it was obviously news related with earnings. Sometimes it isn't news related, but it just so happened to be news related during this time period when the white swan pattern formed. So what can we expect here? I'm going to bring out the dragon pattern really quick. The dragon pattern also was calling for 81.81 PT1 right after it reclaimed BC. It came up here to PT1 and 181 So that's the next target for the dragon. It's calling down the line 196.38. As I bring out my drawings here, I'm also going to bring out the bullish white swan and black swan patterns. But the next level I would be looking at here for Apple, if there's continuation, would be to reclaim 185.81 and then 188.73. Above that, then you have 198.93, which was the previous, I believe, all-time high here. Yeah, the previous all-time high. And then you could be looking at, for the psychological level above 200, you have OPR at 205 and then 214. If you find some resistance here, the HSI is still signaling that it wants to continue pushing towards these overbought extreme conditions, and that could be anywhere between 188 to in the 190s before it finally finds some resistance there within the HSI, and you could be forming an HSI arrow to the downside. Right now the RSI still has some wiggle room to the upside as well. The amplified RSI is a little bit overheated right now, but if we do find resistance here, the next level I would be looking at would be 182.94. Below that, then you have the 200 SMA at 181, the 200 EMA at 177, and then you have this huge gap to fill there around 173.42. So right now, Apple for the first time closed above the 200 SMA since back here when it broke above here in November, right? We have been trading below the 200 SMA since, looks like, February, so it is finally breaking up above here. So we'll see if Apple continues with that momentum. We got news of Warren Buffett selling shares of Apple. I think it was in the tune of 13 billion, I believe, or a little bit more than that. So they definitely sold some shares there, which could be also the reason why this was being sold off here. So if that is off the table, we'll see if Apple starts to continue pushing here. If we go over to the weekly, we did have high volume buying pressure here. Obviously that's going to come with the earnings play, but if we're looking here at the dragon, you could see the next target here for the dragon would be 194.52, which would give confluence to the dragon pattern there at PT2, and then you have 207.09. If you fill this area here, you have yet to complete the type 1 reaction at PT1, which is at 156.44. There is still a situation where if down the line maybe data or the market actually comes back down, that there is an attempt here to test a 200 EMA SMA, which is around 147. From historical data here, from historical previous levels here, the 200 EMA has always been a good level of support above Apple. So definitely would be, me personally, be keeping a close eye if it tests here for a potential buying opportunity for Apple. On the HSI, within the weekly time period here, you did cross the midline. So if this goes to these overbought conditions, we could definitely, if this is to repeat anytime it goes and creates these sold conditions, and you go to the overbought conditions within the HSI, this would potentially make a higher high, and we could potentially see a new all-time high above 200 for Apple. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft on the weekly, still have this bear shark pattern. As you can tell, the weekly 21 EMA has held support so far on some of the blue chips and on some of the indices here. So we're still in support of the 21 EMA. You had a hammer candle here last week, and now you form another hammer candle this week off of decreasing volume. So what can we expect here harmonically to the downside? If you fill this area here, the next level I would be hop there at 368.74, where the 50 EMA SMA is at. Below that you have terminal bar at 351, the 886 of the pattern at 334, and to complete the type 1 reaction at target 1 would be 290.11, where the 200 EMA and SMA are at. Right now the HSI within the harmonic pattern is reaching these oversold conditions again. So if it does fail, if it does go to these oversold conditions, you might be able to see hop there at 368.74, where you could find support here and then start to look to push back up. Obviously it doesn't have to reach these oversold conditions, but if it does, there is that scenario where hop could be the level of support if it continues to the downside. If it starts to curl back up and reclaim the 90 EMA here around 410, then we'd be looking for some upside potential on the daily here. We do have targets here where we can rely on to see what these levels would be to the upside. as I bring up my drawings here. If we do continue finding support above these ranges here, the HSI on the 1 day did cross the midline. So if this now goes up to the overbought conditions, then the next level I'd be looking at would be the 50 SMA of 408 and the 50 SMA where PT1 is closely at around 414.36. Above that, obviously you break momentum back bullish from the swing high to swing low. That would be retracing more than 50% of that wave, and you can see these targets to the upside around 418, 429, OPR at 434.42. So on the daily, you had obviously completion of the dragon pattern at PT2, as well as a completion of a type 1 reaction to PT1 off of a previous dragon pattern, and you found support at a key level there around 386. So if Microsoft is suggesting more upside, I definitely want to see the volume increase. There is a dividend date here. The ex-dividend date is on May 15th. So we'll see if there's going to be more momentum back up. The EMA started to curl up here. So we do have a bit of resistance here below 414, and we need to see Microsoft break in order for this to get bullish back again. So definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon on the weekly does have this current bearish shark pattern. Last week we did create a hammer candle off the retest of the 21 EMA. So 21 EMA on the weekly has been good support here for the blue chips as well. Not only just the indices, but the blue chips. So what can we expect here for Amazon? You had a huge volume increase. Obviously that's related to earnings, but another hammer candle here with what looks like it's building momentum back up with strength and increase in volume. So the next level I'd be looking at within this harmonic pattern would be to reclaim the high there when we see was created there at point 189.77. The terminal bar is at that level. You reclaim that level, then you could see this go to hop there with the new all-time high for Amazon at 203.04. In my opinion, Amazon as well as Google has been a little bit lagging in terms of creating new all-time highs, whereas Microsoft and all these other companies like Meta, NVDA have already made new all-time highs. These Amazon and Google is still lagging behind a little bit. So on the weekly, the RSI it's almost approaching overbought conditions as well. The HSI is flatlining here. We'll see if it's starting to attempt to push back up to that midline, see if it gets rejected or it breaks above it. If it breaks above it, this can get very bullish for Amazon, harmonically speaking. If it fails to break above the terminal bar here at 188.77, the next level you'd be looking at would be 175.95, and then the 21 EMA there at 170 and change. Losing that level, there is a gap to fill all the way up to 160. You would have some support there around 154, the 200 SMA around 144, and then down the line to complete the type 1 reaction at 135.60. If we go over to the daily here, there is no current harmonic pattern. This pattern, ABCD pattern, is invalidated because 30 bar rules way above it. So if we're just looking at here just off the daily, we did get a 921 crossover here. So right now the HSI also found support above the midline, and it's looking like it wants to continue, maybe pushing higher. Friday's volume was off decrease in volume, and we did get an HSI dot on Thursday. So there is still that chance this comes back down to fill that gap we left on Thursday. A lot of gaps were left on Thursday into Friday, so that gap gets filled there around 185. So still unclear yet whether Amazon comes back down, but it is starting to get a little bit bullish here as the down the swing high to swing low, you're already you got rejected at the 886. So this is already shifting bullish again for Amazon. So if you break above this, we could see new all-time highs for Amazon. So definitely keep a close eye on Amazon. Jumping over to Tesla here. Tesla currently has this bullish Garley pattern on the weekly. We did find support at Hop, and then obviously for the earnings play, we did go as high as 198 to test a 200 EMA, but ultimately fell short and cannot close above XA there at 183.81. So what can we expect here? There is that gap to fill around 173. If it fails that, then we obviously will come back down to test Hop at 145. The HSI within the weekly time period here did find support and break above the midline. So maybe we do get that gap fill, find support there, and then maybe look to create a higher high to maybe complete the type 1 reaction at 225 where the 200 SMA is at. It's still unclear yet. We are looking at the daily here really quick. We can see that we have some bearish momentum here to maybe come back down. We had the HSI arrow on Wednesday, and still just hovering above the 50. So that's about 3-4 candle closes above the 50. Just trying to see if it's actually going to break above XA again. We have a bit of a few indecision candles with wicks up here, so maybe we are consolidating here. We have some support here now. The EMAs are bunching in between the 1876 range and the 171 range. So if momentum starts to pick up to the sell side, in my opinion, you could come back to that gap fill. There is that gap fill to fill around 172 and change, and then the other gap fill down there around 146. So right now the HSI did form that HSI arrow off of that shooting star, but it is, kind of, it looks like it's establishing maybe a range between 183 here and 177. The HSI is looking like it's curling down, and it wants to test that midline, so that could be roughly at the entrance of the gap. If it fails that and it breaks down below, then I'd be looking at 174.44, 167, and then 164 again. To the upside on the daily, reclaim XA, then we're looking for a retest of the 200 SMA around 200 EMA, I should say, around 204, and there is that gap to fill around 206. It's kind of unclear, in my opinion, what can happen here. A lot of indecision candles with wicks here, so it's very, very important to see if Tesla's actually going to hold this area, or we're just going to come back down. So definitely keep a close eye on Tesla. Jumping over to Google here. So Google on the weekly has this current ABCD pattern, as well as the white swan that was generated back in January 29th. That actually came down for a type 1 reaction to target 2, found support, and it went for a type 2 return to its OPR at 162.91. So right now the ABCD pattern did generate last week off of the earnings news, where HOP was at 175.37, and this is coming down to ABCD here at 164.78, where it did retest but closed above it. So if the ABCD pattern is now taking precedence here for a type 1 reaction, the type 1 reaction is calling for a target 1, 134.75 down the line. Obviously below that, then you have target 2 at 110, and then the white swan pattern for that extreme case scenario to PT3. If you get momentum, that would be obviously maybe news related. Down the line, PT3 at 99.46, that would obviously take some time to play out. But if we go over to the daily here and I bring up my drawings, we can look at what can happen on a day-to-day basis. So right now we do have this black swan here, PT3, obviously the same scenario here. You got news and it pushed up above it, right? So right now it's finding some resistance here to break up above 168.07. You did generate this hanging man on the daily on increase in volume. So if this is starting to signal a reversal back down, the next level I'd be looking at on the daily would be 163.29. Lose that level, you have the 13 EMA there, 21 EMA at 159 and change, and then maybe you gap fill there around 156.49. Below that, then you have XA at 154.21, slightly above the 50 EMA. Right now the HSI did break above the HSI midline slightly, so we're going to see if it picks up momentum. You could argue this is a hanging man, but this is also a hammer candle here that could have flipped. This absorbed most of the pressure here, so in my opinion you could give it to the bulls, because on the previous close you had low volume here, right? It closed at 166.62, and then you came down and you absorbed it, and now you closed higher at 167.24. I think you'd give that to the bulls in that case scenario. You would look to be pushing above again to 168.07, and then maybe that high there 175. So definitely keep a close eye on Google. Jumping right into Meta here. So Meta, we don't have a harmonic pattern formed on any of the macro time frames between 1 day and 1 week. So what can we expect here, just based off of candlestick formations, EMA strategy, and volume to price analysis? We looked at last week where it did close for the first time the 21 EMA, and we've managed to reclaim that level again, but this time it was on decreasing volume. So what can we expect here for Meta? One thing I want to bring your attention to is the HSI is oversold here, so this could be forming a potential reversal where you could generate an HSI arrow. There is no harmonic to go along with that yet, but there is that potential that this could be reversing back up. If we go over to the daily here, the daily is starting to increase in volume from Thursday to Friday. Obviously it's still too early to tell, but there is some resistance here based on the EMAs here around 460. If it continues pushing a break above that, then you have 474, the gap to fill around 482, and then the 50 SMA at 491. For Meta to be a little bit bullish again, you would have to take a fib retracement here. We're at currently getting rejected just below the 382, so in a swing wave to corrected move, a rejection of the 382 could mean that's a huge rejection, and you could continue pushing back down to create another impulse wave, which would be below this low here at 1450. If you lose that low, then there is that gap fill at 400 and change, the 200 EMA at 391.50, 200 SMA is at 377 and change. So right now the HSI did cross the midline, the RSI was completely oversold. So if this is going to reverse, you definitely want to break above minimum the 21 EMA here, and more specifically to actually shift momentum here, you definitely want to be closing that gap. So the 618 at 486 would definitely break the momentum back bullish. The 50% retracement would be at 473, which would be knocking on the door saying, hey, we want to switch momentum here. Meta's trying to switch momentum to the upside, but we still have to break above the 382. So in order to get bullish again for Meta, in my opinion, you need to be above 486. So definitely keep a close eye on Meta. Jumping over to NVDA here. So NVDA on the weekly, no harmonic pattern, but we did generate an HSI arrow as the HSI was completely oversold. And we also formed a hammer candle on slight decrease in volume compared to last week. We had 252 million volume and 208. So this is a reversal candle, which could imply that a reversal to the upside is incoming, but we have to see if that is going to be the case. So if the HSI is signaling that reversal, for it to take you back to these overbought conditions again, you would definitely see NVIDIA come back to test all-time highs and maybe even create new ones. So if we go over to the daily here, and as I bring on my drawings, I do have levels here we could rely on as the next level of resistance. It's at 894.14. A break above that, then you can see the $900 range, and as you can tell, when we broke up here, we went all the way up to 970. So that's the next level I'd be looking at. Is if it breaks above 894, then I can see this go to 970, and then maybe in that case a psychological level at 1000. Above that 970 target, I do have a Fibonacci retracement number at 1030. So if you do find resistance here, then the next level I'd be looking at would be to fill that gap around 863, the 921 EMA there around 856, and the 50 SMA at 828. Losing that 50 SMA, you can come back down to where it hit this bottom here on 756. There is a gap to fill there, starting at the entrance at 743 and change, all the way down to 690. Obviously, it's too early to tell right now. It is trying to shift momentum. If we take our fib retracement tool from the most recent swing high to swing low, we can see that it is finding resistance at the 1618, which is very close to that 894.14 target I had drawn, I have had for a while now. So if you break the 618 here, the next level to the upside would be the 786 and 927 and on and so forth. If you flip momentum above the 618, in my opinion, that is breaking the downtrend here that it's currently in, and you are shifting momentum back up, which could create higher highs and higher lows and just be pushing higher for longer. Obviously, we're going to have to wait to see. Earnings for NVIDIA is on May the 22nd, so some of the semiconductors stocks here have gotten a little bit of momentum last week, so we'll see if there is more continuation to the upside for NVIDIA, so definitely keep a close eye. Jumping over to Netflix here. So Netflix, similar to the blue chips and some of the indices, finding support, 1, 2, 3 retest of the 21 EMA, and finally closed above it for 2 weeks in a row now. So what can we expect here for Netflix? The HSI completely oversold, and if you find support here, maybe form the HSI arrow, you'd be looking at a retracement back up. So 589, and then these highs here around 640 and change. Above that, then you have a target there that I drawn here at $700.99. If we go over to the daily here, the daily, we have this bearish dragon pattern where it did complete the type 1 reaction to target 2 there at 549, and it found support. We had 1, 2, 3 attempts, 4 attempts there, and it is currently finding support. So we are starting to increase in volume here as the HSI broke that midline. The AMP RSI is still going higher, and as well as the RSI. So the next level, if it breaks above the 50 EMA here around 584, reclaims target 1 there at 591.41, then the SMA here at 602 and change, you could see that gap fill as well, and you'd be looking to push here above to BC there at 630, 643, and then that psychological number. If you find resistance here at the 50 EMA around 584.26, next level I'd be looking at for this to come back down is to test PT2 of 549. Obviously, with the increase in volume here to the downside, you can see that entrance of the gap there at 536, where you fill it all the way down to around $500 and change, slightly above the 200 SMA where it's at 491 but below the 200 EMA. So definitely keep a close eye on Netflix. Jumping over to Bitcoin here. So Bitcoin on the weekly, no current harmonic pattern here, but just like the indices, it is finding support above the 21 EMA. There was some absorption there. We do have this candle close on the weekly. It will be closing 1 day and 2 hours from this video. So that's Sunday at 8 p.m. Eastern. This candle will close. So that candle, if it continues pushing higher, it's going to close as a hammer candle off of increasing volume on the weekly. The HSI completely oversold. So if we get that more volume and close on a stronger hammer candle with no wick up there, with no shadow there, then you can maybe print that HSI arrow, and this could be a signal, potential signal, that this is reversing back up. Obviously you'd have to reclaim 69k, and I do have some of the targets here from the bearish dragon pattern that we would have to reclaim. So right now, the past 3 days looks like it is on decreasing volume. This candle will finish here in 1 hour and 49 minutes from this video on the 1 day. So that is showing some signs of decreasing volume so far on the daily. Obviously you have some resistance here at the 50 EMA. If you break up above it, basing this on the HSI breaking the midline, then you definitely have to retest that 50 SMA at 65k, 65.9k. So you can see some confluence not only in just crypto, but the markets in general approaching their 50 SMA on the daily here. So a break above this and you're looking at 69k, and then you're looking at 72.2k here BC. Obviously the high there, which was around 73k, and then you see the OPR there at 77.3k. So judging by the HSI midline, if we get some more volume back up and go to these overbought conditions again, you could see potentially Bitcoin reaching 70,000. So definitely keep a close eye on Bitcoin. Alright guys, last but not least, I am going to be covering AMD, as this was the winner of last week's video here. I did mention I was going to do something new here with doing harmonic technical analysis on user submitted comments. So if you want to participate in that, make sure you comment down below a ticker you would like me to cover. Just make sure it's not a penny stock, because that's something I will not do. So if you comment down below the favorite ticker, and I will be picking one at random for next week, and that will be added to the next week video. So for this week, again, Rafael Iribarren is the winner with AMD. So let's jump right into the analysis for that. So AMD here on the weekly currently has this bearish shark pattern. You are at the terminal bar there at 151.05. You are completely oversold within the harmonic pattern, with the HSI signaling that and maybe reversal is incoming, but you definitely want to see that first with some volume kicking in here. Maybe in this week here you could look for a potential reversal candle, maybe a hammer candle, who knows, whatever that reversal signal is. You definitely want to see with high volume to generate that HSI arrow. So if you don't find support above the terminal bar here, the next level I'd be looking at would be the 50 EMA, which is at 140, where it did found support and it climbed back up. But if it fails, the volume did pick up on the weekly volume. The 50 SMA has 135 and change. Below that, then I have a more harmonic target there at 108.25. The 200 EMA SMA is at 102 as well. If we go over to the daily here, you can see that it is finding support at the 200 EMA. The HSI on the midline here is at the midline on the daily. You could be consolidating here. Right now it looks a little bit bearish here. It looks like maybe just AMD is starting to create lower lows and lower highs. If you fail the 200 EMA here, you have the 200 SMA at 138, and then target one at 124.30. If you consolidate here, the next level I would be looking at would be to reclaim the 21 EMA here slightly where the gap fill is at. So that gap fill gets filled at 157.27. Above that, then you need to, for this to reclaim bullish momentum again for AMD, you definitely want to be above the 618, which is at 194, and we're far away from that. So right now you have to give this to the bears for bearish momentum right now. So you either consolidate here, maybe you start pushing up here. You could be forming, if you start to push up towards that 618 or the 50% retracement, you could be creating a bear flag down the line, which would just, look something similar to this potentially, who knows, and then you could be coming for a lower low. Obviously it's still too early to tell, but right now it looks like it is finding some support here at the 200 EMA. So definitely keep a close eye on AMD. Alright guys, that's it from me. I will be streaming same time as always from Monday to Friday from market open to market close. So if you want to catch me streaming, I do stream live over on Twitch. So link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your weekend, and I will see you guys on Monday. So take care everybody, and peace.